All right, welcome back. Counting two. We are getting almost to the end here at Chapter 14, corporate worksheets. We have done the trial balance that is equaled. We've done the supplies and insurance adjustment. We've done the allowance for uncollectibles adjustment. We just got done finishing up the depreciation adjustment. And now we're going to have to calculate corporate income tax. Corporations need to fill out their own tax return every year. So like Ford Motor Company, it doesn't matter if you're the CEO or the assembly line worker, you'll fill out your own tax return on the paychecks you made from working, right? Your own individual 1040, and you'll fill it out under your name. Ford Motor Company will fill out its own corporate tax return. Okay, and they're going to have to estimate how much they think their bill is going to be. And they're going to have to prepay it, right? So they're going to have to look and say, we estimate we're going to have this much in revenue minus this much in expense. Ballpark, we think we're going to make about this much money this year based off of all of our prior years and what we think is going to happen. What do we think our tax bill could be, right? And they're going to probably shoot a little bit low of what it actually is going to be, and then they got to pay it every 3 months. So first quarter, January, so on and so forth, right? And then by April 15th, they're going to have to pay the rest, right? So we're talking about the corporation already prepaid what they think they owe. Now they're going to have to figure out what they actually owe. Similar to how we would do it, right? We have taxes taken out of our paycheck every pay period, and we fill out our 1040 form at the end of the year and say, did we pay too much, too little, the exact right amount? Corporations will almost always pay too little, and they'll need to come up with a tax bill at the end. So how do we calculate it? We're going to start, and if you remember this from Accounting 1, where we got the trial balance, you got the adjustments done, and you start dragging numbers across to both the balance sheet and the income statement. So your top half of your worksheet is your balance sheet. That's your assets, your liabilities, and your stockholders' equity. So you take your cash number, drag it over to the debit balance. Petty cash, debit balance. Account receivable, debit balance. Allowance for uncollectibles has a trial balance number. You're going to grab the adjustment number and add them together, and now it's going to go to the balance sheet, but it's going to be a credit, right? And all your liabilities are credits. Drag over the original cost of your plant asset. Take your old accumulated depreciation plus your new depreciation, and it becomes a credit. So just drag it over to the right. Make sure they're going in the proper debit or credit column, and then just leave it. Don't worry about totaling it, just leave it. Come back, do the same thing for the income statement. Start with the trial balance, drag the number over. If there are contra accounts or there are adjustments, drag them over. If there's more than one, if there's a trial balance and an adjustment, add them together. And the trial balance numbers drug over to the income statement are going to be your revenues. They're going to be your cost of merchandise sold, your purchases and discounts and whatnot, and your expenses. Now we're going to start with just the income statement, right? So total up our debits. Total up our credits. Our credits are really our revenues coming in or the purchase stuff that we returned. My debits are going to be the sales return, my purchases, and all my expenses. Okay, they're not going to match. They're not supposed to match, right? Because we either made profit or we had loss. Big idea here, which is why I all caps it at you and not trying to yell, just want to separate it. When you add up all of those income statement debits, do not include federal income tax. Don't include how much you've already paid, right? That's going to skew our numbers. We want to assume that we haven't paid anything, even though we did. When we calculate our federal income tax, we don't want to say, hey, we've already prepaid this. Let's say we need to figure out how much we should have paid off of our revenue compared to our expenses and cost of goods sold. Then we'll go back and look and say, what's the difference, right? So income statement credit minus the income statement debit, again, not including federal income tax expense, that's your net income before taxes, right? Because we're not including that federal income tax expense. So now we're going to take that net income before tax, and if you're jumping forward in the textbook, I'm going to need you on page 428. You're going to go look at that tax table, and you're going to calculate how much federal income tax we should have paid. And that is a progressive tax schedule. The first, $50,000, it's taxed at 15%. Then anything above 50 to say 75, that's taxed at 25%. Not all of it at 25%. This first chunk at 15%, the next chunk at a little bit higher rate. Next chunk at a little bit higher rate. Okay? Take whatever that value is, whatever that tax liability was, and you're going to plug that into the income statement debit column. This is how much I should have paid the government. Then we're going to work backwards to calculate the adjustment. So the income statement debit number is what we should have paid. The trial balance debit number is what we did pay. So our adjustment is going to be a debit to federal income tax expense because we still got a little bit we owe the government, and then a credit to this liability, federal income tax payable. If you notice, that number was blank in the trial balance and it was blank in the balance sheet until we did this adjustment. So here's an example from the textbook. Our income statement credit column, a little over $500,000. Income statement debit, but not including federal income tax, $396,000. We had $104,000 in net income before taxes. Right? So the first $50,000 of that 104 is going to be taxed at 15%. The next chunk from 50 to 75, according to the book, is going to be taxed at 25%. The chunk from 75 to 100 is going to be taxed just that $25,000. That's going to be taxed at 34%. Anything above 100,000 is going to be taxed at 39%. So if you look at page 428 in the textbook, this is the exact example with these numbers. So it's going to calculate out and say we should have paid $23,889.24. Go back and figure out what we did pay and calculate our adjustment. So here's that exact schedule. First $50,000 at 15%. Next 25 at 25%. Next 25, well, we had 104,000. We've already taxed the first 100,000. So we still got 4,200 that needs taxes. It's at 39%. We take our $50,000 tax bill plus our $25,000 plus our $25,000 plus this last little bit. And there's our total federal income tax expense. The income statement number. So again, trial balances work, adjustments here work. That 23,000 number is coming over here, income statement debit for federal income tax expense. We prepaid 18,000. We should have paid 23,000. We still owe the government $5,800. Okay, so here is our debit part of the adjustment. And again, we're skipping some lines here. You go all the way up to line 14, federal income tax payable. Well, we now have to write a check eventually for this $5,800, the amount we didn't pay the government. Then we're going to slide that number over here to the balance sheet as well. So calculate the federal income tax adjustment. Total and rule the adjustment columns, debits and credits equal. Extend our account balances into the income statement and the balance sheet. Once we've done that, now we can total up all of our columns, right? We got the actual tax bill that should have been paid. So now we compare our income statement credit to our income statement debit, money coming in compared to money going out. We say we have $80,000 of net income after federal income tax. We compare the difference between our assets and our liability and stockholders' equity, and that difference should be the same difference. So total income statement and balance sheet accounts, calculate and enter the net income after federal income tax, extend your net income amount over here to the balance sheet, Calculate your column totals, right? 419 plus 80 is the 500 number. 500 plus 0 is the 500 number. When these two match, double rule. 269 plus 0 is 269. 189 plus 80 is 269. When these two numbers match, double rule. So again, they're kind of cutting out the middle here, but here is what our Hobby Shack 8-column worksheet is supposed to look like completed. Start with the trial balance, numbers equal. Start plugging in our adjustments one by one. Get all the way down to that very last adjustment. Start dragging things over to the balance sheet side, to the income statement side. Calculate what our federal income tax bill should have been. Come back and do our final adjustment, and then we're going to total. When the debits and credits equal on everything, then we can double rule.